Good morning, students. Welcome to this session on accounting standards on paper 5. So today we are going to start with accounting standard 4, which is about contingencies and events occurring after the balance sheet. During the course of our discussion, as you all know, you can just keep sending your queries and we'll keep discussing your queries. And we'll be using this study material as the base for the purposes of our larger discussion. So now talking about contingencies and events occurring after balance sheet date. Now what is this contingency? Contingency could be in any sort of form which may arise to the entity at any point of time. And the idea is to understand as to how this will get recorded in the financial statements at that point of time. But as regards this standard, the larger coverage which is covered by this standard happens to be in relation to the events which arise before the balance sheet date or after the balance sheet date, and in respect of such events which arise after the balance sheet date, how are those required to be dealt with. Okay, so this is briefly about the standard. Now let's quickly get on to understand about the meaning of contingencies, and then we'll get on to understand about the events after the balance sheet date. Now what is this contingency? Now, contingency we can say is a condition or a situation for which the outcome is uncertain. Means in respect of this event or this condition to which the entity becomes subject to, whether the outcome is going to be favorable or unfavorable, or as to how this is really going to impact the entity is not really known at that point of time. That is something which is called as contingency, which may impact the organization. In respect of contingency, there are certain events for which the outcome is not known and which also happen to be dealt in the nature of contingent liability, for which there is a separate standard altogether. But as regards these type of events which are covered under AS4, we are talking about contingent losses. So let's take an example to understand about this. Say ABC has filed case against a debtor for a recovery of rupees 24.5 lakhs. According to the legal team, the chances of recovery are not there. So there is no chance that this money will be recovered from the debtor. Therefore, in such a scenario, what will ABC do? ABC is a company. ABC will create a provision, or you can say ABC will understand that now ABC will not be able to recover this money, and that's why they will make a provision for this, and that's why they will start booking a loss in respect of this non-recovery of the debtor balance. Now, as regards this loss, which is a sort of contingent loss, there is no certainty at this point of time. Means whether this full amount will not be recovered or whether the partial amount will not be recovered, and even if the amount which is going to be recovered or the amount which is not going to be recovered, as to at what point of time this entire set of events will take place. So this is something which needs to be estimated by the management. So the estimation of amount of this contingent loss to be provided for is something which is based on the judgment of the management. If there is conflicting or insufficient evidence for estimating the amount of contingent loss, then the standard requires the disclosure to be given in the financial statements. Now, what is going to be the disclosure? Disclosure is around this non-recoverability of the debtor balance, for which again there is no clarity as to how this is going to be recovered. Okay, clear on this? Now, similar to this, there could be certain events which may be favorable to the organization. Now, this was one of the event for which, or you can say in which there was a loss to the organization. So that's why we consider this to be a contingency, which is something resulting in a loss, or you can say contingent loss. Now, similarly, there could be certain events which may result in a gain, and that's why Those are something which are in the nature of contingent gains. So let's talk about those contingent gains now. Contingent gains are not recognized in the financial statements. Why? Because as regards the accounting, we follow the principle of conservatism and we are following the accounting principle of prudence, wherein even if there is a loss which is not certain at that point of time or the point of time when we are discussing it, we are supposed to create a provision for this. But as regards the gains, we are not required to record that till the time we are not certain about the time, or you can say point of time when that gain will be realized by that. So that's why in respect of contingencies, we need to be clear whether that will result in a loss or whether that will result in a gain. Okay, these type of situations. So this is briefly about the contingencies, which is something which the standard deals. Now we will move on to the most important part of the standard, or you can say the significant part of the standard, that is about the events occurring after the balance sheet. Now, before we get on to the technical part of this events occurring after the balance sheet date, let's try to briefly understand as to what is that we are now trying to understand. Say for example, this is the timeline wherein we are talking about financial year or you can say financial year ending on 31st March 2022. Okay, and this is from 1st April 2021 to 31st March 2022. So this is the financial year that we are looking at. Now we are very clear in terms of recording of transactions which arise during the financial year. So any transaction which will take place during the financial year will get recorded within the financial year. Now, we also understand that the finalization of the financial statement doesn't take place within the financial year itself. Means, when do we prepare the financial statements? Financial statements are prepared after 31st March 2022. Why? Because only after this date we are clear in terms of all the transactions which have taken place during the year. So that's why the finalization of financial statements will get completed subsequently. So let's suppose this is the period which the management has targeted, within which finalization of financial statements for the year ended 31st March 2022 will take place. And let's take this as a cutoff. Okay, so let's suppose management has planned 30th June 2022 for the closure of the financial statements. Yeah. Now, as regards this standard, we are talking about those events which will arise during this period. Okay, which will arise during this period. Now, which period is this? From 31st March 2022, or you can say from 1st April 2022 to 30th June 2022. Now, if there is any event which takes place during this period and which has an impact on the financial statements for the year ended 31st March 2022 or not, how do we deal with those type of events? Understood the context? Yeah, so this is the context that we are looking at. Now, in respect of these types of events, we can say any event which arises during this period can be categorized into two parts. One, is the adjusting event and second is the non-adjusting event. So let's talk about adjusting event first of all. So any event which would take place during this period may be an adjusting or non-adjusting event. Now what is adjusting event? Adjusting event. Adjusting events, you can say, are those events which arise during this period. Okay, definitely which arise during this period. But in relation to these events, some evidence in relation to occurrence of this event or happening of this sort of transaction would have existed on the balance sheet date or during this financial year also. Okay, I'll repeat my point. If let's suppose during this financial year or up to this balance sheet date, if there was some evidence of the event which would have taken place during this period, if some evidence would have existed in respect of the event which would have taken place during this period, then such type of event is called as adjusting event. In relation to adjusting event, we are required to record the transaction during this financial year itself. So we can say adjusting events will get recorded. Or recorded means they will get accounted for in the financial statements of year ending 31st March 22. So recorded in financial year 2021-22. Okay. Now let's take a very simple example for the adjusting events. Now what could be an adjusting event? Say on 31st March or up to 31st March 2022, let's suppose there was a debtor. And in relation to this debtor, the company understood that the financial position of the debtor has started deteriorating. Financial position of the debtor has started deteriorating significantly. So that means up to 31st March 2022, the company had an evidence that the money in respect of this debtor may not be recovered or may be partially recovered. Yeah, something will be lost as regards this recovery of money. And let's suppose this debtor, so now we are saying financial position of this debtor was not good. Financial position was bad. As regards this debtor, its financial position was not good. Okay. Now, subsequently, what do we see? Subsequently, during this period, before the financial statements are finalized, before the financial statements are approved, we see that this debtor has become bankrupt. Let's suppose this debtor has become bankrupt. Let's suppose this is the date, say 30th April 2020. Okay. Now, let's suppose the total amount of this debtor was 20 lakhs. And the company created a provision of rupees 5 lakhs up to 31st March 2020. out of which provision of 5 lakhs was created. Why? Because the company expected that 15 lakhs will be recovered, but 5 lakhs will not be recovered, considering the bad financial position of this debtor. But now, on this date, when the debtor has become bankrupt, so can we say that the money will now be recovered from the debtor? Not at all. Okay, it's fully gone out. And now we also understand that the financial statements of 31st March 2022 are not yet approved. Why? Because they are not yet finalized. Yes, so they are not yet finalized, they are not yet approved. So that's why standard says that such an event which has taken place even if this event has taken place after the balance sheet date, we should record this event, okay, or we should record the impact of this event in the financial statements of financial year 21-22 itself. Clear? This is also called as adjusting event. This is also called as adjusting event. Clear on this? Clear on the meaning of adjusting event? Now, moving on to next type of event. As we discussed, there are two types of events which are possible. So, the next type of event is non-adjusting. Non-adjusting events. Now, what are these non-adjusting events? These are again the events which would have taken place after 31st March 32, but up to the date the financial statements are not yet approved. Up to the date financial statements are not approved. But in respect of non-adjusting events, there was no indication or there was no evidence as around existence of these events on the balance sheet date or up to the balance sheet date. Okay, that means there was no indication, there was no evidence that such an event may take place if you look at this financial year. Okay, so that event took place all of a sudden. There was no linkage of this event which would have taken place during this period, during this financial year. Yeah, so this linkage is completely missing. That's why the standard says that non-adjusting events will not get recorded in financial year 21-22. So when will those get recorded? Those will get recorded in the next financial year, means 22-23, but not in financial year 21-22. Yeah, let's take an example for these non-adjusting events also. Let's suppose fire took place in the company. So company had a plant, and let's suppose on 1st of June 2022, fire took place. And because of this fire, some part of the plant, which is material in terms of the amount, got damaged. So this plant is not completely damaged. Some part of the plant is damaged, but the amount is significant. Now in this scenario, should we consider recording this loss which the company has incurred because of this damage by fire in the financial year 31st, in the financial year 21-22, considering the fact that the financial statements of 21-22 are not yet finalized? The answer is no. Why? Because this is non-adjusting event. As regards this fire which would have taken place, there was no condition, there was no evidence, there was no indication that it would occur on this date. Okay, so during this period, there was no indication that such an event will take place during this period. So that's why standard says such an event should not be recorded. But generally what we see is a disclosure in respect of such events. Okay, clear on this? Yeah, clear about the meaning of adjusting and non-adjusting events? Any questions, any doubts that you may have on this? I think Gajar had a query. Difference between adjusting and non-adjusting events is what Naveen Chandra. Yeah, Naveen Chandra had a query. So I'm hoping, Naveen, you are clear on this now. Very simply, to differentiate between these two, we can say adjusting events are those for which some indication, evidence existed during this period or up to the balance sheet date or the balance sheet. But in respect of these events, there was no indication during this period. There was no evidence during this period. Please remember that for both these types, when would the event take place? After the balance sheet. In both these types, events will take place after the balance sheet. And we are discussing in the standard as to how these events which have taken place after the balance sheet get recorded in the financial statements of 21-22. So that's the context. Clear? Clear on this? So now we can pick up some examples. Okay, so if you can move on to illustration number 1. Yeah, any questions, any doubts that you may have, you ask me. Then we can move on to illustration number 1. Okay, Shivam has a query. Shivam is asking, is non-adjusting transaction recorded on 30th June or 31st March? See, non-adjusting event, if you talk about its recording, this will get recorded during this financial year, not in this financial year. Okay, that's why I've said over here. As regards recording, only adjusting events get recorded, not the non-adjusting events. Clear? But there are some more types of events. We'll talk about that separately. As around these two, only the adjusting events get recorded. Okay, Harsh is asking, sir, if no provision before 31st March is created and debtors become bad after 31st March, will it be an adjusting event or not? That would still be an adjusting event, provided we are able to see some evidence, some condition in relation to that debtor up to the balance sheet date. Okay, so it's not necessary that up to the balance sheet date some provision should have been there, but some indication as regards the financial position of this debtor, because of which it's not recoverable or it's not recoverable partially also should be there up to the balance sheet. Okay, I think it was Pooja. Pooja is now clear on this. Very good. Yes. Any more questions? Any more doubts? No? Clear on this? Great. So let's move on to illustration number 1. And you can just look at the study material, page 1.7. Yeah. Page 1.7, illustration 1. When you are writing these notes, just make sure that you are leaving some space because there are a couple of more situations that we'll cover. Yeah, after discussing some examples, I'll come back to these notes. So I'll continue from this point only. In X Company Limited, theft of cash of rupees 5 lakhs by the cashier in January 2000 X1 was detected only in May 2000 X1. So in May 2000 X1, theft got detected. Okay. When did this theft take place? In January 2000 X1. So that means it remained undetected up to this period. The accounts of the company were not yet approved by the board of directors. So we are now looking at 1st March 2000 X1. Okay. So we are looking at financial statements of 2000 X0 X1. Okay, so these are the financial statements that we are looking at. And we are also talking about the event which has taken place after the balance sheet date. Please remember, the event has to occur after the balance sheet date. Now we need to decide whether the theft of cash has to be adjusted in the accounts of the company for the year ended 31st March X1. Yeah. So over to you. I think it's a very, very simple one for you to answer. If you can just let me know without looking at the solution, please. Yes, quickly. What is your answer? How do we deal with this situation? Quickly. Okay. Abhinay is asking adjusting means we can adjust it in current financial year. If not, then carry forward to next financial year. No. Adjusting means we need to adjust it in the financial year up to this 31st March. Not the one in which this event has taken place, but you can say prior financial year during which its condition existed. Okay, then I think Shreya, Pooja have got some queries. I'll come to your queries separately. If you can answer this question, please. Quickly, waiting for a response. What do you think? It will be an adjusting event or non-adjusting? And how do we do this? Okay, great. So I can see now your responses. Shivam is saying this will get recorded. Then Pooja Pradeep is saying it's non-adjusting. Can you also tell me the reason why you're saying adjusting or non-adjusting? Parth is saying it's adjusting and it will get recorded in this financial year itself. Then Pooja is saying yes, it will get recorded. Tanu is saying this will not be recorded. But can you tell me the reason, please? Whether it's recorded or not, what's the reason for this? Kashish is saying yes, it will be recorded. Prakshali is saying yes, it's adjusting, and that's why it will get recorded. Then I think Sandeep, Hina, Harsh, and Kanish, they are all saying it will be recorded. Okay, great. So let's understand this. I think it's fairly simple. Now, in relation to this event, which we can see has taken place after the balance sheet date, there's an evidence, or you can say there's an indication, there's a condition which existed up to this financial year. Okay, during this financial year, this condition existed, okay, or this indication existed. Even though this was not detected, it doesn't matter. But the moment it got detected, we knew that this is something which was taking place or which had taken place in this financial year itself. So that's why it's an adjusting event. So that's why this event is what? This event is adjusting event. Okay, and the moment we get to see that the event is adjusting event, what do? We will record that. And when do we record that? We will not record in this financial year. No, we will record this event in this financial year. Clear? Clear on this? Then I think Anita had same answer. Prasanna had same answer. Very good. Tanu, I'm hoping you are clear on this. Niveda is having the same answer. Then I think I missed some of your responses. Nitya, Gadi, Sakina, Mans, Sandeep, they are all giving the same answers. Very good. And then Chinamaya has also same answer. Great. So let's pick up one more example. Then I think you will get more clarity around it. Okay, then I think we can move on to illustration number 7. Okay, we can move on to illustration number 7. And this is page 1.10. Before I read this illustration, let me just quickly answer your queries. Some of your queries I missed. Okay, Shreya is asking if the debtor had paid only partial amount and became insolvent after the balance sheet date, will that serve as an evidence for classifying it as adjusting event? Yes. It doesn't matter that whether the debtor has paid this amount or not. We are looking at the condition. We are looking at the evidence in relation to this known recovery up to the financial year in which this recording has to take place. If this evidence existed, that is good enough for us to call this event as adjusting. Yeah. And we are not saying that the money has to become fully bad. Even if it is partially bad, we need to recognize the loss. Okay. Then Pooja Pradeep is asking if the debtor was well and solvent till the financial year end, but then suddenly in the next financial year, his business got fire and he had huge losses. Would you still say it's an adjusting event? No. In that situation, as you are very clear, there was no adjusting event. What is the adjusting event? Adjusting event is those, you can say, are those events for which evidence, for which some indication existed in the financial year for which we are considering whether we should record that or not. Clear? Then I think Ria has given the same response. Abhinay has given the same. Okay, Abhinay is clear on this. Shreya is asking, does that mean that just recognizing the evidence after the balance sheet date, even when it wasn't evident in the financial year, is enough to classify it as adjusting event? That's correct. Anita is saying, if the theft in the previous example that we have just discussed, okay, illustration 1, if the theft was detected after finalizing the balance sheet, please remember, by finalizing the balance sheet, we are talking about approval of the balance sheet. Okay. If this has got detected after the approval of the financial statements, then in which financial year it will get recorded? See, please understand, if the financial statements are approved, means those are final, those are finalized, those are signed off, those are approved, so those are done. In such a situation, even if some event arises which may have an impact on those financial statements, we are not going to change that. Okay, this standard doesn't talk about those events which will take place after the approval of the financial statements. Okay, clear? If any such event arises after the financial statements have been approved, then definitely it will get recorded in the next financial year. Clear? Perfect. So we can now move on to this illustration number 7. During the year X1, X2, Raj Limited was sued by a competitor for rupees 15 lakhs for infringement of a trademark. Based on the advice of the company's legal counsel, Raj Limited provided for a sum of rupees 10 lakhs in its financial statements for the year ended 31st March X2. Okay, so provision was created for rupees 10 lakhs. Okay, during this financial year. On 18th May 2000 X2, subsequently, this is 31st March X2, then subsequently on 18th May X2, court decided in the favor of the party alleging infringement of the trademark, means Raj Limited lost the case. And Raj Limited was ordered to pay the aggrieved party a sum of rupees 14 lakhs. So on this case, Raj Limited lost the case. And this resulted in a loss of rupees 14 lakhs. The financial statements were prepared by the management of Raj Limited on 30th April 2000 X2. Financial statements were prepared. And they got approved by the board on 30th May. Board of Directors approved that on 30th May. Okay. Now in this case, as regards this event which has taken place after the balance sheet date, what do you think will be the accounting treatment? Over to you. quickly. Will you consider this as adjusting or non-adjusting? Over to you. Shivam is saying it's non-adjusting. Okay. What about others? What about others? Srishti is saying it is to be recorded because it's an adjusting event. So the company will have to adjust rupees 4 lakhs more as a liability. Preksha is saying this will be adjusting as the event has occurred on 18th May and by that time financial statements were not approved. So that's why it should be adjusting event. Quickly, what about others? I'm hoping you're all clear on this now. Okay, great. I can see a lot of responses now. Riya is saying it's adjusting, so it should be recorded. Prakshini is saying adjusting, it should be recorded. Shivani is saying it should be recorded. Sonal is saying it should be adjusting. Memam is saying it is non-adjusting. Okay, Tanu is saying adjusting event. Shivani is saying non-adjusting. Okay, this one non-adjusting. Then Shreya is saying it's adjusting. Okay, let's get on to the solution now. Now in this case, we understand that this litigation was going on. And when do we have this understanding? During this financial year itself. Means during this financial year, there was evidence, there was an indication as around this event. So that's why even if this event takes place after the balance sheet, still we will consider this as adjusting event. Now, in this case, the only thing which has got added in the question is the consideration of the fact whether we consider this cutoff of finalization of financial statements or approval of financial statements. So we need to consider the approval of the financial statements as the cutoff date. So that means any event during this period will be considered by us. And in this scenario, this event, because it has taken place before the approval of the financial statements, therefore this will become adjusting event. And now, as a result of this, what will happen? 14 lakhs is the total liability. This is total liability. Okay. Out of which 10 lakh is already there. Company has already recorded 10 lakhs. So what is the balance amount which needs to be recorded? 4 lakhs. So 4 lakhs need to be recorded. And when will this get recorded? In the financial year X1, X2. Clear? Clear on this? You can see the response of Sanjana quite late, the illustration 1. Nitya has answered for this one just now. I missed this response earlier. I can see a lot of more responses. There's so many responses which have come. Pratibha, Sharan, Puja, Khushi, Smile. Then Gadi, Dishan, Niveda, they've all given responses. Chinamma, very good. Isaac is saying yes, it's something which is adjusting. Okay, great. Sandeep has also given the amount, Sandeep Sandhu, that yes, 4 lakhs needs to be recorded. Okay, yeah. Great. So we can move further now. So I think so far we are clear in terms of events which take place after the balance sheet date as to how those are recorded, or as to how those are required to be dealt with, whether those will be recorded or not. Yeah, but we'll also pick up one more situation now. Just give me 1 minute and let me just find one more illustration. Okay, so let's go to illustration number 4 now. Yeah, let's go to illustration number 4, and this is page 1.8. Ria is asking about dividend. See, there's few concepts of the standard we have not yet covered. Let me just get done. Automatically, you'll get answer to all of your questions. Huh? Dorji is asking, sir, can we draw this timeline exam along with our answer? See, this cannot be your formal response, this timeline. Definitely, this can be a rough working. Huh? So the space that you get in the exam for the rough working, completely rough working, you can use that. Huh? There's absolutely no problem if you consider this to be a rough working. Isaac is then asking, can we say that case against or provision of rupees 10 lakhs as the evidence? Yes, of course, that's the evidence only. Okay. Now moving on to next illustration. Illustration number 4. In preparing the financial statements of R Limited for the year ended 31st March X1. So this is 31st March X1. You come across following information. State with reasons how you would deal with these in the financial statements. Company invested rupees 100 lakhs in April 2000 X1 before the approval of financial statements by the board of directors in the acquisition of another company doing similar business. The negotiations for which had started during the financial year itself. So on 30th April 2000 X1, one investment has been made, rupees 100 lakhs. And let's suppose the financial statements got approved on 31st July X1. Okay, now for this, what do? Shall we call this an adjusting event and record this in the financial year 2000 X0 X1? Or should this be considered as non-adjusting event? Tell me quickly. Yes, over to you. Quickly, huh? Waiting for a response. Okay, Parth is saying it will be recorded. This is adjusting. Kashish is saying non-adjusting. What about others? Yes, tell me, should this be adjusting or not adjusting? Sandeep is saying this is adjusting. Hina is also saying this is adjusting event. What about others? Okay, Tanu and Niveda, they are saying this is non-adjusting. So I can see mixed responses now. Abhinay is saying it is adjusting. Okay, Sonal is saying this is adjusting. Fiza is saying non-adjusting. Isaac is saying adjusting. Ismail is saying non-adjusting. Prakshi is saying non-adjusting. Okay, what about others? Kushi is saying non-adjusting. Okay, Dorji is saying this is non-adjusting. All right, so let's go to the solution now. See, as regards this event, in relation to this event, it's very clear that this investment has been made on which date? On this date. Okay. Definitely, you may get confused with the statement that the negotiations have started. Okay. But with the negotiation, are we sure that this investment will take place? No. Because as regards the negotiations, there could be so many transactions which may be under discussion. So does it mean that we will record each and every transaction for which negotiation would have taken place? Let's suppose on 31st March, company is talking to a vendor for purchase of some goods. Yeah. And which are eventually, let's suppose, purchased on 2nd April. So does it mean it will get recorded on 31st March? Let's suppose company is talking to a customer for sale of goods on 30th March. And this deal gets through, let's suppose, on 3rd of April. So does it mean that just because the negotiation was there, this will get recorded in this financial year? No. Yes, so I can understand the point of confusion because of which you consider this to be an adjusting event. So that's why I'm just trying to clarify this point. So therefore, in this situation, what do you call this as? This will be non-adjusting event. This will be non-adjusting event. And if this is non-adjusting event, will this get recorded? Will this get recorded? No, this will not get recorded. Okay. When will this get recorded? In this financial year, which is definitely the case. But as regards this financial year, this will not get recorded. Yeah. But a disclosure in respect of such type of events is required to be given in the report of board of directors, or you can say the approving authority. By approving authority, we mean to say if it's not a company, then the authority which has approved the financial statements, in their report, disclosure will be given. Okay? But in the financial statements, no recording will be done. No transaction will be recorded. Clear? Clear on this? Then I can see some more responses around this. I think Disha, Prakshi, Harish, Gadi, Manas, they have answered this. Purti, I'm hoping you are clear on this now. Pratibha, Gridisha, You're all clear on this. Okay. So let's move further on our discussion. So we talked about two types of events so far. One is adjusting and second is non-adjusting. Adjusting, non-adjusting. There's another type of event which may arise and which may challenge the going concern assumption. Events indicating going concern assumption inappropriate. Okay, so let's understand about these types of events now. How should these types of events be dealt with, or what do you mean by these type of events? If you want to refer study material, you can refer page number 1.5. We discussed about events, and in relation to those events, we discussed that every time we'll check whether the evidence, whether the condition, whether the indication was there up to the financial year or not. Means the last financial year for which financial statements are getting finalized was there or not. But sometimes some of the events may take place even if they take place after the balance sheet, but they may challenge the going concern assumption. So let's suppose we are talking about financial year 2021-22. Okay, everything was good during this financial year 21-22. But on this date, some event has taken place, and because of this event, the very existence of the organization is now challenged. It has put a question mark as around the going concern assumption of this entity. And we all understand that this going concern assumption is the fundamental assumption. If this assumption is missing, then the financial statements are prepared on liquidation basis. I am hoping you are clear on this aspect. Huh? In paper 1, you would have understood this. Yeah. Now, as regards these types of events, standard says that you will, irrespective of whether such event has arisen after the balance sheet date and for which condition or indication did not exist during this financial year, you will make the adjustments in the financial statements. You will make the adjustment in the financial statements. So let's understand this with the help of an example. Let's say on this day, fire took place. So company had 2 plants. Okay. These 2 plants got destroyed because of fire. Now this fire took place after the balance sheet date. And we may say, but sir, fire is an event for which there is no indication, there is no evidence during this financial year. So this should be non-adjusting event. Ideally, this should be non-adjusting event. The answer is yes. This is non-adjusting event. But despite being a non-adjusting event, if this event has an impact of making this going concern assumption inappropriate. Now, company had 2 plants, so the very existence of the company is gone now. It has got challenged. So that's why in this scenario, what do you do? In this scenario, because of this event, despite this event being non-adjusting in nature, but because of the fact that the impact of this event is very significant and this has resulted in going concern assumption becoming inappropriate, the financial statements of 21 and 22 will be prepared on liquidation basis. Means we will have to put the impact of this event for this financial year's financial statements itself. Clear on this? Yeah. Now we can pick up another illustration to discuss this. Let's move on to illustration number 2 on page number 1.7. Illustration 2. An earthquake destroyed a major warehouse of ACO Limited on 20th May 2000 X2. There was an earthquake. Accounting year of the company ended on 31st March X2. Accounts were approved on 30th June X2. The loss from earthquake is estimated at rupees 30 lakhs. So there is a loss of rupees 30 lakhs because of this. And we are talking about financial year X1, X2 that is. State with reasons whether the loss due to earthquake is adjusting or non-adjusting and how the fact of loss is to be dealt by the company. Okay. Clear on this? Yeah. Waiting for a response now. Abhinay was asking, sir, even though those events don't have evidence, means which are challenging the going concern assumption, they will get recorded yes. Ria was asking in that case, yeah, in the third type of events, every item in the financial statements, yes. The entire set of financial statements are prepared on liquidation basis. And that is what you know. Yeah. So if you read AS1, that talks about it. I'm sure you would have gone through it. That if the going concern assumption is inappropriate, then definitely the financial statements will be prepared on liquidation basis. Okay. So waiting for a response. Quickly. Rohan is saying this is an adjusting factor. Jay is saying this is non-adjusting. Manas is saying if there is no impact on going concern assumption, it will be recorded in. It will not be recorded. Okay. Shivani is saying it's non-existing as no evidence was present. Okay. Ria is saying it will be recorded in this financial year. What about others? Okay, then Vinod is saying it's non-adjusting. Parth is saying non-adjusting. Kanishk is saying it should be recorded. Srishti is saying it's adjusting. As this huge, the impact is huge, which will challenge the going concern assumption. Okay, Niveda is saying should not be recognized. Okay. Then Shreya is saying, despite being non-adjusting, since it challenges the going concern concept, so event must be recorded. That is, the fact must be disclosed in the financial statements. Yes. Any more responses? Yes. Dorji is saying it's adjusting. Devashish is saying non-adjusting. Okay, Sandeep is saying non-adjusting, and Fiza is saying this is non-adjusting. Abhinay is asking, sir, in illustration number 2, they said only major loss has happened. Should we take it as this question of its existence? So we'll deal about both the situations over here. Don't worry, okay? Now, in this question, just the point which Abhinay mentioned, I think similar sort of aspect you will also have to consider in the exam. If you look at this situation, okay, if you look at this event, the question doesn't talk about going concern assumption at all. Okay, question is silent on this. Question simply says that the company has suffered a loss of 30 lakhs. Now we don't know whether this loss will have such an impact that it will challenge the going concern assumption, becoming inappropriate for the company. We don't know about it. So now, considering that aspect and considering this to be a loss, but which will not challenge the going concern assumption of the entity, what do you call this loss as? Or what do you call this event as? Non-adjusting. In which case, only a disclosure is required. In which case, only a disclosure is required to be given in the report of board of directors. Yeah. Another thought which may be drawn from this. We may say that the event is very significant because the earthquake has taken place. Yeah, earthquake has occurred and which has destroyed. So if you look at the information, major warehouse of the company. Okay. If we consider this destruction as a very significant destruction, and because of which the going concern assumption becomes inappropriate, in such a scenario, what should we do? In such a scenario, financial statements of this year should be prepared without considering the assumption of going concern. Means will that be prepared on a liquidation basis? Okay, yeah. So while answering this question, you will have to put together both the responses. So you'll have to give both the situations. That if we don't consider the going concern assumption becoming inappropriate, then it is non-adjusting, for which only disclosure is required. But if we consider that the going concern assumption is becoming inappropriate, in such a situation, this is something which will get adjusted in the financial statements for X1, X2. Clear? Clear on this? Yeah. I think Abhinay, that answers your question. Same was your query. Okay, then I think I have missed a lot of responses. Sandeep, Shubhank, Anita, they have answered this. Ismail has answered this. Tanu, Vivek, Gavi, Nitya, Chinama, Harish. Very good. Sorry, I've missed your responses. Okay, now moving further. Dealing with another sort of situation. That is about dividend. Okay, so far we have discussed three types of events in a way: adjusting, non-adjusting, and the events which are making going concern assumption inappropriate. Now we are dealing with another type of situation. Okay, what are these? We are now talking about dividend. Dividend we all understand. If we understand about dividend, okay, the way this entire scenario works, because there's a legal framework around dividend. For a particular financial year, let's suppose if we talk about financial year 2021-22, for a particular financial year, if the dividend is required to be proposed, then this dividend is something which is proposed by the board of directors. Means board of directors will recommend, they will propose the board of directors the dividend for a particular financial year. Yeah, but when does this dividend get finalized? This gets finalized in the AGM. In the AGM by the shareholders of the company. In the AGM, the shareholders of the company approve this payment of dividend. Only then the dividend gets paid, not before that. Correct? So we can say these are the event. Okay, dividend again is an event which takes place after the balance sheet date and which is also approved after the balance sheet date. Correct? That's why in relation to this dividend, there should not be any recording during the financial year 21-22. Even though it pertains to 21-22, it will not get recorded in this financial year. When will this get recorded? This will get recorded in the next financial year after its approval by the shareholders. Why? Because that is when it becomes a liability on the part of the company. Before that, it's not a liability on the part of the company. Clear? Clear on this? So whenever you will have proposed dividend, when will that get recorded? In the subsequent financial year. And in this financial year, for which the dividend is proposed, what do? Only a disclosure is given. Only a disclosure is given in the financial statements. Clear? Clear on this? Yeah? Any questions? Any doubts? Okay, I think Sonal has a question. Sonal is asking, sir, in the exam, do we have to write both the answers like the one that we had in the previous illustration? In case we have two types of situations, we need to answer both. Yes, it's better that you take the assumption and answer only one, or it's better that you deal with both the scenarios in the solution. That will always be better. Okay. Okay, Shivani is asking, sir, can you please explain the dividend part again? Very simple, Shivani. Whenever you have proposed dividend, so for the financial year to which it pertains to, in that financial year, you will not record the proposed dividend. You will only give a disclosure in the financial statements. And when will that get recorded? In the next financial year, after the approval by the shareholders. As simple as that. Okay. Yeah. Simply clear. Okay, very good. So if you are done, then I think we can just quickly summarize our discussion. Some of these points that we have covered. In fact, you can also refer this flowchart on page number 1.6. I think this captures very beautifully all the aspects related to events occurring after the balance sheet date. So you can have this good summary in respect of discussion that we have had. So now quickly summarizing all of these aspects that we have covered. So we can have three types of events. Okay. In case the event is adjusting, what do? Record in the financial year to which it pertains to. In case it is not adjusting, then you don't record it. Only a disclosure is given in the report of approving authority. In case it's an event which is challenging the going concern assumption appropriate, then the financial statements will get adjusted in a way that they will be prepared on liquidation basis, which is something when we do when the going concern assumption becomes inappropriate. And fourth is a sort of separate situation which is not really linked to these three types of events, and that is about proposed dividend. So the moment we see proposed dividend, we need to remember that this will not get recorded in the financial year to which it pertains to. It will get recorded in the next financial year. But for this proposed dividend, a disclosure in the financial statements is required to be given. Clear? Clear on this? So I think with this, we come to an end to our discussion in relation to this standard. And now what you can do is you can just make note of some questions. I think which you need to attempt. is your homework. So illustration number. I think 3, 5, and 6. Yeah, please note down your homework. Very simple illustrations you need to do. Okay, moving to your queries now. Before I move on to the next standard, Abhinay is asking, so those previous events we saw should be recorded even when we have no evidence, and the dividend should be recorded only in the next financial year, even if it pertains to the prior financial year? Yes. So let's suppose if it's financial year 21-22, dividend is proposed for 21-22. When do you record it? In 22-23. Okay, as simple as that. Yusak is asking, sir, whether disclosure is required for adjusting event? No, not really, until unless you believe the event is very, very significant. Because when you are recording it, then definitely it is getting captured in the form of asset, liability, P&L. Yes, any more questions? Any more doubts that you may have on this? No? So we can now move on to the next standard. AS5. Another very simple accounting standard. Yeah, simple in the sense the one we have just completed was a very small one and very simple one. Similarly, AS5 is also small one and simple one. Net profit or loss for the period, prior period items, and changes in accounting policies. So you may refer to page number 1.11. We all understand net profit or loss for the period, correct? Prior period items, changes in accounting policy is something that we need to now understand. But before we get on to this prior period item or the changes in accounting policies, which is, you can say, the dominant part of this standard, we can talk about some terms which are important for us to understand in the context of profit or loss only. See, when we talk about the profit or loss of the business, a business may have two sets of activities. Okay. One is that set of activities for which the company is going on. Let's suppose if a company is dealing into trading of furniture. So what's the nature of business of the company? Trading of furniture. So in relation to this company, what will be its ordinary activity? Sale, purchase of furniture. It's something which is ordinary. Yeah. Or you can say all of these transactions which are around trading of furniture, they are in the ordinary course of business of the company, because that is the nature of business of the company, or you can say nature of the company, nature of the business of the company in the ordinary course. That's why any profit or loss which the company generates from this trading of furniture is also called as profit or loss from ordinary activities. Yeah, clear? Very, very simple term. Yes, I'm not really adding anything to this because this is something which is all of us know. Now, for this company, there could also be some more types of transactions which are not in the ordinary course of the business of the company. Let's try to understand about those transactions now. Now, in relation to this company for which the business is what? For which the business is trading of furniture. So if the company will have manpower, if the company will have employees, if the company will have purchase, if the company will have sales, if the company will incur certain expenses, they will all revolve around furniture only, or the trading of furniture. And that's why this entire set of activities in which the company will be involved will be around ordinary activities, or its activities in the ordinary course of business. But at times, there could also be certain set of transactions which may occur, which may take place, which don't have any linkage to the ordinary set of activities of the company. Those set of activities or such type of transactions, such type of events are called as extraordinary activities, or you can say any profit or loss which gets generated from that, or any income or expense which arises from such set of activities is called as extraordinary item. Clear? Any income, if let's suppose that is favorable, it will result into income. If let's suppose that is non-favorable, it will result into some expense. So such type of income or expense which is not in the ordinary course of the business of the company will be considered as extraordinary item. Now this standard requires that whenever there is an extraordinary item, okay, or whenever you have any income or expense which is in the nature of extraordinary item, then such an item should be presented separately in the financial statements, and a disclosure in respect of that item should also be given in the financial statements. Why? Idea is to highlight that. Idea is to highlight that to the users of the financial statement so that they get to know that out of this total profit during the year which the company has generated, some part of that profit or loss pertains to those activities which are not in the ordinary course of business of the company. Clear? Clear on this? Now, let's try to understand what are those extraordinary set of activities. I think very, very simple and easy. Say, for example, if the company's properties get attached, okay, so let's suppose if there's a bank loan and the property of the company is attached, yeah, that is something again which is not really in the ordinary course of the business. If let's suppose there's an earthquake, can we say it's an ordinary set of activity? No, it is again an extraordinary item. So in respect of these items, now what do you do? In respect of these items, we give a disclosure in the financial statements, and such type of events in terms of their impact are also presented separately in the financial statements. Now, please don't try to link it to the events after the balance sheet, because all of these events that we are now talking about under AS5 are those events which are taking place during the financial year. Okay. So now, when I am talking about earthquake, please don't get confused, sir. We discussed about this earthquake in AS4 also. So how can we have a separate treatment now as compared to AS4, and why AS5 is also dealing with this when AS4 has dealt with this? Because please remember, under AS4, what did we discuss? Event which took place after the balance sheet. Okay. Now we are talking about events which are taking place within the financial year itself. Clear on this? Clear? Yeah? Okay. Any other set of events which may arise is called as exceptional item. Okay, another type of item which may arise, we may say will be around exceptional item. But I think we can pick up this one after the break, because I can understand that I have stretched this a bit. But before we get on to the break, let's discuss your queries quickly. Nitya is asking, sir, will this going concern assumption affect the approval of the financial statements? Not really. Abhinay is asking, what should we do to make this subject simple and interesting to practice more and more examples? Shreya is asking, the same will be applicable in case of gains also? Yes, it's both ways. Then I think Isaac again has some query around AS4. What are the different, I think as we discussed, Isaac, it was about favorable or unfavorable. It could be around both these. Riya is asking, like sale of machine for furniture business, can we say it's an extraordinary item? Yes. So let's suppose if we talk about this company, wherein the nature should be what? Trading of furniture. Let's suppose company has got a building and that has been sold during the year. It has resulted in huge profit. Yeah, so there's a significant gain. So the P&L has an impact on this. So that is again extraordinary item. Yes, Shreya, that's true. Okay, Dorji is saying, can we record dividend as a provision in the current period? I think again, this query is around AS4 only. If the dividend is approved before the finalization of financial statements, see, that's why I told you that around dividend, there's a legal scenario which is attached. So dividend is something which will follow a legal route only. When you say that the dividend will get approved before the financial statements get approved, is not possible. Okay. Yes, so what we can do now is we can now quickly take a break, and after the break we will continue with our discussion on some of these items which are covered under AS5. Okay, in the meantime, if you have any questions, you can just keep sending your queries and we'll pick up your queries also. All right, yeah. So let's take a break, 10 minutes. Yeah. Hi, welcome back. So we'll now continue with our discussion. But before we get on to our discussion, let me just quickly get on to your queries. Okay, so I think Ria has a query around dividend. Ria is asking what can be the treatment of interim dividend. So that will remain same. That will not get impacted by the treatment of proposed dividend. Isaac is asking, what about interim dividend? I think as around dividend, let me just make this point very clear that the way dividend gets recorded, it will remain same. It will not change. If that is the one that pertains to a particular financial year, that has also got approved in that financial year, and that is also paid in the financial year. We are only talking about proposed dividend. Proposed dividend happens to be the dividend which doesn't get finalized, which doesn't get proposed, okay, or you can say which doesn't get approved and paid in the same financial year. As regards interim dividend, that always gets finalized, approved, paid in the same financial year. Clear? Hina has picked up a lot of activities, and Hina is saying that if we look at that aspect of extraordinary activities, so taking that example, okay, or going by that concept, we can say rent, dividend, interest, they are all extra activities. They are not really the ordinary activities of the company or the activities of the company in ordinary course of business. I'll come to that aspect also slightly later, please. Isaac is asking, sir, in the example of sale of building, can we say that sale of plant and machinery is incidental or ancillary to the business? So how can we classify events as extraordinary or extraordinary? Sorry, as ordinary or extraordinary? Can we say extraordinary items result in huge profit or loss? I think there's a confusion around extraordinary and ordinary. So let me just clarify that point first of all. By extraordinary items, we definitely mean to say those items which are not in the ordinary course of business. Number one. So they are definitely not in the ordinary course of business. But along with that, we should also look at this aspect which Isaac has mentioned, that we are looking at items which have got significant impact. Okay. Now coming back to one of the situation like Hina mentioned, that sir, let's suppose if we pay interest expense, should we consider that to be an activity in the ordinary course of business? The answer would be yes. Why? Because if you would take a loan on which you will pay the interest, then that loan is taken for the only set of activities. And for that activity, you are incurring some expense. Let's suppose if you have taken a warehouse on lease for which you are paying the lease amount or this rent amount. That is again something which is related to the trading of furniture, if I talk about my example. So that's why to say that all of these items will be not really related to the ordinary course of business will be incorrect. I'm not saying that by ordinary course of business, it's only limited to sale or purchase. In a business, there are hundreds of activities which are required for this business cycle to go on. What I'm covering over here is those set of activities which are not required to run the business. Clear on this? Oh, yeah, clear? Or you can say those expenses which are not required for running the business. Clear? Yes, so once you confirm, then I'll move because I could see a lot of confusion around this. Yes, quickly. Are you clear on this? Like Abhinay mentioned that for textile business, purchase of furniture is extraordinary. Of course, it will become extraordinary in case this company deals with purchase and sale of furniture. But for textile business, definitely some furniture will be required. Yes or no? If you go to the office, you'll need furniture. If you go to the plant, you'll need furniture. So that furniture is not extraordinary activity. Clear? Yes, quickly, please confirm. Once you confirm, then I'll move further. I'm hoping that you're now clear on this aspect. Quickly. Yeah, Sandeep is saying yes, it's clear. Very good. Devashish is also clear on this. Great. So now moving on to another set of activities, or you can say another concept, which is called as exceptional item. Now, what are exceptional items? Standard says when an item has an impact on the P&L of the company in a way that the P&L of the company gets significantly changed because of this item, which means if we have an income or an expense which significantly impacts the P&L of the company, and now we are not talking about activities which are not in the ordinary course of business, we are talking about ordinary activities only. We are talking about ordinary activities only, but those activities have resulted in an income or an expense which has a significant impact on the P&L of the company. Then the standard says such items should be separately presented in the financial statements, and a disclosure should also be given in the financial statement. In fact, sorry to say that this is not something which is coming out of the requirements of the standard. In fact, standard as such doesn't deal with exceptional item. Standard only talks about the extraordinary item. Standard doesn't deal with exceptional item. Exceptional item is a concept which has been discussed under the format of the financial statements, which is Schedule 3. So let's take some examples for the exceptional items. Now, what are those examples? Let's suppose if the inventory has been written down, can we say it is something which is in the ordinary course of business? The answer is yes. But it's a significant event. It's a significant item wherein we have written off the inventory. We may have brought the inventory to its NRV, which is below cost, and there is a very significant impact due to this. Now, because this transaction is significant, that's why this should be considered as exceptional item, and this should be presented separately in the financial statements, and there should also be a disclosure in the financial statements. Another example, let's suppose in respect of any litigation, a settlement has been done. Okay. Now this settlement has a significant impact, so there again it will be presented as an exceptional item. Let's suppose fixed assets of the company have been disposed of and the amount is significant. Long-term investments of the company have been disposed of and the amount is significant. So all of these are examples of what? Exceptional items. Clear? Clear on this? As regards extraordinary items or the exceptional items, what do we need to remember? Two things. As regards both of these, what do we need to remember? They are presented separately. Presented separately means in the financial statements, means shown separately in the financial statements, and disclosure is given. And disclosure is given in the financial statements in respect of these items. Okay. Clear on this? Any questions, any doubts that you may have around this, please let me know. Okay, Shreya has a query. Shreya is asking, so does investment for acquiring a company or similar events form a part of extraordinary items? So you are talking about investment in another company. So let's suppose if a company makes an investment in another company. Now, can we say that this is something in the ordinary course of business? The answer is no. Yeah, until unless it's something which is directly related to the nature of the business of the company. So such an item is definitely presented separately. And for such type of investments, disclosures are also given. Okay, that is something which you'll always see in the financial statements. In fact, investments are something which are also dealt by an accounting standard. So as around your query, there is a separate accounting standard altogether which is dealing with this. Yeah. Riya is asking about disclosure or the notes. See, it's about the disclosures in the notes to accounts. It's not the board report. It's the financial statements, because as around the disclosures in the report of the approving authority, this was only in the context of that AS4. Now we are not talking about disclosure in the reports of approving authorities. Wherever we will talk about disclosure, that will be a disclosure in the financial statements until unless it is specified otherwise. Clear? Now moving further. Prior period items, you can say a very important part of this standard. Prior period items. Very, very important. Huh? Now, what are prior period items? Prior period items mean any item which is either in the nature of income or expense. Means we are talking about P&L item. Okay, by prior period item, we are talking about P&L item, which pertains to the previous financial year. And maybe due to mistake, due to some error, it was not recorded in the previous year. Say for example, if we are talking about financial year 2021-22. What is the current financial year? This is the current financial. And financial year 2020-21 is the previous one. This is the previous one. Okay. Now the financial statements of previous financial year are already closed. They are already approved. Financial statements already closed. Okay. So please remember, we are not talking about a situation which we discussed in AS4. We are now in this year, 21-22. Okay. Now, let's suppose in 21-22, we come across an item which has an impact on P&L and which pertains to previous year or periods prior to previous year. Okay, which pertains to either this financial year or years prior to this financial year, means which does not pertain to current financial year. For example, let's suppose last year purchases were made for rupees 200, but they were not recorded in the financial statements. They got missed. It was an error. Let's suppose last year sales of rupees 1 lakh were not recorded, and this was intentionally not done. Means it was not a mistake which is unintentional. Intentionally sale of 1 lakh was not recorded. Okay. Let's suppose last year there was a fraud of rupees 2 crore, which was not detected in the last year, which got detected in the current year. Okay. Now, if you look at all of these items, they have P&L impact. Correct? They have P&L impact. We can also look at another type of error. Say, for example, last year, during the valuation of inventory, there was an arithmetical mistake. Yeah, totaling was not done properly, because of which inventory was overstated by rupees 20 lakhs. Okay, clear? Now, for all of these items, we can say there is an error in the past year or the past years, and that error could be intentional or unintentional. And that error has resulted in P&L impact. Okay. Now, all of these errors have got detected in the current year. Now, what do we do? Now, in this situation, can we go back to the previous year and open the financial statements of previous year? No, because they are closed, they are done, they are filed, they are approved. So, what is the course of action that we have? The only course of action that we have is to record these transactions. All of these transactions in the current year. Yeah. Even though they don't pertain to the current year, we will have to record those items in the current year only. Yes or no? So we will have to record these items in the current year only. Yes. So that's the course of action that we have. But standard says, whenever we come across any item in the P&L which pertains to the previous year, and which got missed in the previous year, whether it was intentional or unintentional. How will you record that item as? You will record by calling that item as prior period item. You will call that item as prior period item. Means this item will be shown separately in the financial statements, and so this will be shown separately in the financial statements, and for these items disclosure will also be given, wherein the reason for missing these items in the previous year will also be required to be given. Means the management will have to disclose why these items got missed in the previous year. Clear? Clear on this? Yeah. So by prior period item, what do you mean? Items having P&L impact. So what are these? Having P&L impact, pertaining to previous year or years, pertaining to previous year or years, and they could be error which is intentional or unintentional. So these errors could be intentional or unintentional. Okay, clear? Clear on this? Yeah. So any questions, any doubts that you may have on this, please let me know. I think this is very, very simple, but at the same time, very, very important concept. Practically also, you will find this concept very, very important. Why? Because in the financial statements, you will come across these items which pertain to the previous year and which may be missed in the previous year. So how do you deal with that? Okay, clear? Yes, quickly, any questions, any doubts around this? Okay, Pooja is asking, clear sir, but instead of this, we will record in adjusted P&L item. Why separate? Separate means when you will record it and when you will present it, you will present this as a separate line item, so that the user of financial statements get to know what is this item. Okay, and why this disclosure? Because the user of financial statements will get to know the nature of this transaction. Shreya is asking, since the fraud was not detected in the previous year, is similar to the case of theft in the financial year, which got realized in the current year, say before the date of approval of financial statements. See, again, Shreya, what you're trying to do is you're trying to mix two concepts, AS4 and AS5. Please remember, we are not talking about AS4 now. In AS4, what did we discuss? Let's suppose there is fraud and that got detected in the current year. Okay. In AS4, the query was whether it should be recorded in this financial year or this financial year. Yeah. In AS4, we had a provision, we had a window open. Why? Because financial statements of 2021 were not finalized, they were not approved. But here, we are saying they are already done, they are tested, they are finalized. Okay. Now we are looking at that type of theft or fraud. So what do we do now? Can we go to AS4? No. That window is closed. So how do we deal with that? As Clear? Clear on this? Ria is asking, sir, prior period item relating to third party also covered. See, prior period item is not something which is related to third party or any other party. Prior period means prior. Okay, so Somya is asking for example of extraordinary items. We discussed earthquake, for example. Yeah. Pooja is clear on this. Okay, Ismail is asking, sir, how many preceding previous years should we consider? See, we don't need to consider any preceding previous year. We just need to consider the event, the transaction which has arisen in the current year, for which we will check to which year does it pertain. Let's suppose we have got an expense which pertains to the period which is 5 years old. So even that will get captured. Yeah, so there's no capping on the period at all. Clear? Clear on this? Yeah. So I think around this we can also look at one example. Let's go to illustration number 1 on page 1.16. You can start solving this. Page 1.16, illustration 1. Yes, fuel surcharge is billed by the state electricity board at provisional rates. Final bill for fuel surcharge of rupees 5.3 lakhs for the period October 2000X1 to September 2000X7. Yeah, for this period, final bill has been received and paid in February X8. So this is 31st March 2000X8 and this is February X8. However, the same was accounted in X8, X9. Okay, you are required to comment on his accounting treatment. So let me just explain you the facts once again. So the State Electricity Board initially sends the bill at provisional rates. Why? Because they are not approved by the government. So till the time the rate is not approved by the government, they will charge you at certain rate. Once this is finalized, so they will revise their rates, and that's why from this period to this period, State Electricity Board raised an invoice which was duly paid by the company in February X8. So that means in X7, X8, okay, in 2000 X7, X8, company received the invoice and company also paid this. But in this year, the invoice didn't get recorded. Payment was made, but invoice got recorded in the next year. So now, tell me, how will you deal with this type of situation? What will be the accounting treatment over here quickly. I think very simple for all of you. Okay, Chinmay is saying it should be prior period item. Vinod is saying record separately as prior period item and provide disclosure for the reason for accounting less amount in the previous years. What about others? Quickly. Yes. Waiting for a response, huh? Yes, quickly. Quickly, I'm waiting for a response. Shall we go to the solution? Okay, so let's understand this. See, if we talk about this period for which bill was received by the company in X7, X8, if the company would have recorded this invoice in X7, X8, would you call this as a prior period item? No. Why? Because the final bill was received in X7, X8. And prior to this, it was only provisional rate. So the actual rate was available in this year. If the accounting would have been made in this year, there was no prior period up to this year. But the company missed recording this invoice in X7, X8, which may be intentional or intentional. We are not worried about. We just simply know that company missed recording in the correct financial. So that's why, what do we call it as? This will become prior period item. This will become prior period item. And the moment we say it's a prior period item, what is required? First, it has to be presented separately. Second, it has to be disclosed in the notes to accounts. But in respect of prior period items, one thing is for sure, and that is around the materiality concept. Okay. Now, what do I mean by this? See, when you are dealing with the financial statements, you will come across a lot of events. You will come across a lot of transactions, which may be of very small amount and which pertain to the last financial year. So, the intent of the standard is not to pick up all of those transactions and account for them as prior period item, but to capture only those transactions which are material. Material means significant. Yeah, because materiality is a concept which is pervasive. So, in respect of prior period items, also we will have to consider that concept. Clear on this? Yeah. I can now see a lot of queries coming from you, and I think all of you are saying it should be prior period item. Yeah, I think it took some time to update your responses, but great. Disha, Shreya, Ramakrishna, they are all saying it's prior period item. Okay. All right. So now moving further. Just give me 1 minute. Huh? Moving further on to the next item. Just give me 1 minute. Okay, now moving on to the next concept. That is about changes in accounting estimates. Okay. So before we talk about changes in accounting estimates, let us quickly do a recap of the meaning of accounting estimate. And I'm sure you would have covered this already. Now, what is an estimate? Estimate, we can say, is an approximation. Something which is not 100% accurate. It's only an approximation. And that's why they are subject to changes. We are not saying they are subject to manipulation. They are subject to changes. For example, if we talk about depreciation of PPE, depreciation is based on two things. Can any of you tell me what are some of those factors which we will consider for depreciation of PPE? Quickly. I think it's very, very easy for you to answer. As around the depreciation of PPE, what are those two things on which it will remain dependent? Yes, quickly. As around depreciation of PPE, what are those two factors that you will consider on which depreciation will be based? Okay, great. So Shraddha is saying useful life and the rate. Ria is saying useful life and the residual value. Vinod is saying useful life. Very good. So depreciation is something which is computed on the basis of useful life and residual value. Correct? This is something which is based on these two. And as around these two, we also understand that they are not always 100% accurate. Can we determine the useful life of PPE with 100% accuracy? The answer is no. Can we determine the residual value of PPE with 100% accuracy? No. So what does the management do? They always estimate. They will always estimate the useful life. They will make the judgment. Yeah, they will also use certain principles for making the judgment. But irrespective of that, or irrespective of whatever they do, what is it? It's an estimate. It's an estimate. Yeah. And it may happen that the useful life which the company may have assessed in the current year may change after 3 years. It may go up or go down. Yeah, so we are not only talking about positive change or the negative change. It could be either of them. Yes or no? Yeah. So this is the meaning of accounting estimate. Now, as around the accounting estimate, we understand that a disclosure is required to be given in the financial statements. But as under AS5, standard says whenever there is a change in accounting estimates, okay, whenever there's a change in accounting estimate, in such a scenario, what should we do? We should look at its accounting treatment prospectively. Means whenever there is a change in accounting estimate, it will be recorded prospectively. Number 2, a disclosure should be given whenever there is a change in accounting estimate. And let's take an example for this. Okay. Because this is best understood with the help of an example. Let's say currently life of the machine, or let's suppose life of the machine was taken as 10 years. Yeah. Its value was 100. So what will be the depreciation charge ignoring the residual value? It will be rupees 10 per annum. It will be rupees 10 per annum. Correct? Yeah. Okay. Now, say for example, after 3 years, its life is 7 years and its WDV will become 70. So now let's suppose after 3 years, when its life should be 7 years and its WDV is 70, management has reassessed its useful life. As per its original assessment, its life should have been 7 years. But today, what the management found was that due to some technological change, this machine will not be usable after 2 years. This will only be usable for next 2 years. So the management has reassessed its life as 2 years instead of 7 years. Instead of balance useful life of 7 years, it's been reassessed as 2 years. So in such a scenario, what do? Do we go back to this year and change the depreciation computation and WDV by taking the total life as 5 years? The answer is no. Standard says that today when you have changed its useful life, because now the scenario has changed, now this estimate has changed, what do? You will consider the balance useful life and you will depreciate this WDV over the remaining useful life. So what will happen because of this? The depreciation impact will come out to rupees 35 per annum. Yeah, because over next 2 years, if we depreciate 70, it will become 35 per annum. Correct? Yeah. This is called as prospective accounting treatment. Means something which is done prospectively. We are not doing retrospective accounting treatment. Yeah. And in respect of such type of change, disclosure should also be given in the financial statements. Clear on this? Yeah, clear on this? So any questions, any doubts that you may have on this, please let me know. And let me also just mark homework for you. Huh? Okay, so illustration number 3 and 4. You should pick up these 2 illustrations also for homework. Huh? You may or may not be able to do illustration 4, don't worry. But illustration number 3 is something which you will definitely be able to do, but you should also practice illustration number 4. Now moving over to your queries. Yes, quickly. Any questions, any doubts that you may have, please let me know, because with this we'll come to an end to our discussion. We are not yet done with this standard. We will complete the remaining part in the next session. Huh? Yes, quickly. Any questions, any doubts? I could see some of your responses around this question only, which is good. So I think Nitya, Ramakrishna, Devashish, Rohan, Inderpal answered these. Then Pooja, Srishti, they answered. That's great. Just quickly, any questions, any doubts? No? Clear on this? Clear on this? All right. So with this, we can just end our discussion over here. If you've got any questions, any queries, just feel free to send across your queries and we can have discussion on your queries in the next session also. Yeah. And as we discussed that we are not yet done with AS5, there's still some part of AS5 which we'll complete in the next session, and we'll also start with a new topic. So thanks to all of you for your time and for your wonderful participation. Just please make sure that you revise whatever we have covered today, and definitely the homework you need to complete. Okay, thanks so much.